My name is Chris and I work in the sales department here at NinjaTrader, and I'd like to welcome you all to today's NinjaTrader 8 Order Flow Plus event. It is important to understand that there is substantial risk in trading commodity future contracts or foreign currency. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstances and financial resources. It is possible to lose all the funds deposited with your broker, and it could even incur losses beyond these amounts. Please inquire at brokerage support at ninjatrader.com for more information or for a copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation or a recommendation, but simply educational in nature. And what's new in NinjaTrader 8? Well, we've added over 500 user-driven enhancements, which include charting, our new alert system, new features in the Super DOM window, modernized user interface, the Order Flow Plus indicators, and more. NinjaTrader is a free application for advanced charting, market analytics, automated strategy development, and trade simulation. We only charge for our product if and when you decide to trade live on the NinjaTrader platform. Be sure to follow us on Twitter and Facebook for exclusive market commentary, updates on contract expirations, rollover dates, and more. And additionally, the NinjaTrader blog is your home for all things NinjaTrader, and these can be found at the links that I've entered into the room. Order Flow Plus is a suite of premium indicators that we have released for lifetime license key holders with NinjaTrader 8. This industry-leading indicator suite is available exclusively to our lifetime license key holders. The Order Flow Plus indicator suite gives you tools to identify buying and selling pressure through the analysis and visualization of trade activity. For today's presentation, I will be using 4 different charts within a pre-built workspace to demonstrate NinjaTrader's Order Flow Plus suite of indicators, including Volumetric Bars, Market Depth Map, Trade Detector, Cumulative Delta, and Volume Weighted Average Price. Before we begin, let's take a minute to discuss the concept of Market Delta. Market Delta is the difference between buy and sell orders at a certain price, determining whether trades executed as buy or sell market orders based on whether the orders filled at the bid or ask price. Orders that fill at the ask price are assumed to be buy market orders, while orders that fill at the bid price are assumed to be sell market orders. So if there are a lot of orders filling at the ask price, then we could assume that there are a lot of motivated buyers in the market. We'll start with the volumetric bar, so I'll expand that chart into view. And the volumetric chart displays the buy and sell volumes that occurred at each price level of a bar based on whether the trades filled at the bid or ask price. This is essentially a footprint style chart. The volumetric bar type requires historical tick data, and if using delta type bid ask, then the data must also be bid ask stamped. And we'll take a look at some of the parameters that we can change on the volumetric bars. To do this, we'll right click and select Data Series. And the first thing we'll change is the delta type by which we calculate the cumulative delta. With this set to bid ask, this setting accumulates the volume of orders filled at the bid or less versus the ask or more. Orders filled at the ask or more price are considered buying pressure. Orders filled at the bid or less price are considered selling pressure. If the current tick price is between the ask and the bid, the volume will be recorded to the same pressure as the previous tick. With this set to up-down tick, with this setting, we'll accumulate the volume of upticks versus downticks. Upticks are considered buying pressure, and downticks are considered selling pressure. If the current tick price is the same as the previous tick price, the volume will be recorded as the same pressure of the previous tick. The next setting we'll cover will be chart style. We'll scroll down here because I would like to point out that the yellow price is the level that had the highest volume for the bar. The price levels that are the most opaque have the highest delta for the session. So for example, if there was a bar that had a price level with 1 buy and 1,000 sells, and another price level with 2,000 buys and 2,000 sells, the first price level would be more opaque since there's a greater difference between the buys and the sells, a higher delta. Next we'll cover chart style type. And with this set to bid-ask, this will show the number of trades executed at the bid and ask prices. By contrast, by setting this to delta, this will only show the difference between those values. After changing the chart style type to delta, we could see that the highest delta values are also the most opaque. The next setting I'd like to cover is the show imbalance. And here the price levels, buying and selling volumes are compared diagonally to understand which side of the market was stronger by exceeding the set imbalance ratio. This can be helpful if multiple imbalances cluster close together to form support and resistance areas. And I would like to open a section of the help guide now. And I will include a link into the room here. And on the ES, the bid and ask are typically one tick apart. For us to compare the buys versus sales imbalance, we will compare the buy price to a sell price one tick lower. So if we have 57 buys at 26.5250, we would compare it to the sales at 26.5225. For this example, let's say there are 106 sells at 26.5225. We would then take the 106 sell orders and divide them by 57, which gives us 1.86. The default imbalance is 1.5, and since 1.86 is greater than that, the sell text will be colored as an imbalance. Additionally, for the text to be marked as an imbalance, the volume must be greater than the minimum delta for imbalance, which by default is 10. The next setting we'll cover is ticks per level, and this setting can be used to aggregate the value from multiple price levels. This is helpful when looking at a longer time frame chart or a chart that would have a wider price range for each bar. So I'm going to increase this to a value of 3. We can see that there's now 3 price levels per tick. And if I set that value back to 1, then each price tick will have its own price level. And the size filter setting works similar to the related cumulative delta indicator setting and will only include trades greater than or equal to the defined volume. So we could set the volumetric bars to include data for trades above a certain volume threshold. I'm going to set this to a value of 30. And you'll see that any trades that are below 30 have been removed from the volumetric bars. If I set that back down to 0, then all trades will be included in the volumetric bars. And the last setting we'll cover is the color dominant side. With this enabled, this will color the side of the price level that has the highest volume. And that will do it for the volumetric bar. So we'll go ahead and move on up to the market depth map. So I'll pull that chart into view. And Claudia was asked if this section is being recorded. And Claudia, yes, we do record all of our YouTube or our webinars and post them on our YouTube channel. And we have recorded this webinar and posted it on our YouTube channel as well. So let me grab you a link to those real quick. There is a link to the NinjaTrader YouTube channel where you can find recordings of all our videos. And there's a link to the order flow webinar recording on our YouTube channel. When the market depth map is a real-time data indicator that displays the highest market depth volume received at each price level per bar, then maps the market depth to the chart in comparison to other market depth values received within the visible area. This is done by taking the volume range and applying each depth value of 1 of 20 opacity values, set by selected bid-ask depth color. The larger the depth volume, the more opaque the area will be. The market depth map indicator will only build from real-time data, and this means that it will not plot historically and will only plot from the time you load the indicator. And I'm going to pull a Superdome into view here. And if we compare the market depth map to a Superdome, we could see that the more opaque price levels on the chart correspond with greater levels of market depth that we can see on the Superdome. These can potentially be levels of support and resistance. Because there is a large volume at these areas, it takes more orders to fill at that price level to move the market. If the volume is removed or filled and the price goes past it, there is less resistance for the price to continue moving in that direction. However, the market could become exhausted and not have the momentum to move further in that direction. And we'll cover a few of the settings available. To do this, we'll right-click and select Indicators. Then with the order flow market depth map indicator selected, we could then adjust the available settings for us. The first setting we'll cover will be base volume range on. And with this set to percent, this will apply the highest depth volume received to 100% opacity and the lowest to 0%. If, for example, you may not care about the lower volumes as much and just want to highlight the higher volumes more, you could increase the minimum volume range. You could also base the indicator on the defined minimum and maximum volume range instead of basing the volume range on the high and low depth. To do that, you'll want to select exact volume and then fill in the values you would like to use. When you're using the market depth map indicator, you can see that there is a margin between the current bar and the y-axis. This area displays the real-time market depth. For example, this would represent the live market depth values plotting on a Superdome. You could increase the margin size to expand the area and make the real-time depth easier to see. So I'll increase that to a value of 150, and we'll see that that has increased about 3 times in size. And the market depth map will plot 10 levels of real-time market depth above and below the current price. By default, the market depth map will project the last historical data forward until it is overwritten with real-time market depth at that price. By disabling the extend last known value setting, the historical market depth will no longer extend forward and only print at the time the data was received. And we'll go ahead and move to the trade detector section of this webinar. So I'm going to add that to the chart we're currently viewing. So I'll select the order flow trade detector from the available menu and click the add button and then apply to apply the indicator to the chart. Now we have the trade detector being plotted on the chart we're viewing. And the trade detector displays significant trade volume either at a consistent bid-ask level, at price levels, or individual block trades. The marker is colored based on what percent of orders were considered buy or sell orders. Buy volume is the trades that occurred at the ask or higher, and sell volume is volume that occurred at the bid or lower. And this is another indicator that will plot historically as long as your data connections offers historical tick data that is bid-ask stamped. The first setting we'll cover will be base large volume on, and with this set to consistent bid-ask, volume will continue to accumulate to form a marker so long as the bid and ask levels stay the same. If the bid and or ask price changes, a new accumulation of volume will occur to create the next marker. The marker will be plotted on the last price. And with this set to price, with this setting, volume will continue to accumulate to form a marker at each price level within a bar. Each new bar will restart accumulation of volume at each price level of the current bar. And when set to block, a marker will be plotted for each tick that has a volume equal or greater than the minimum volume for a marker. The trade detector is designed to highlight areas of significant volume. If too many markers are on the screen, the minimum volume for marker size should be increased. By increasing a minimum volume, the trade detector will only mark trades above that volume threshold. This will decrease the number of markers on your chart so you could identify the significant trade events. And you can also define the size of the maximum marker and number of pixels. And by default, the size of trade markers will be scaled relative to the visible range of your chart. So the largest trade events within the visible range will have the maximum marker size. By changing the base marker size on to session, the size of the trade markers will be scaled relative to the largest trade event over the course of the trading session. So the size of the trade markers will not change as we change the visible range of our chart because it is calculated on the highest volume from the entire session. The size of the trade markers will only change if a new high volume marker is formed during the session. And with that, we'll go ahead and move into the Cumulative Delta section of this presentation. So I'll expand that chart into view. And Cumulative Delta is an indicator that accumulates the volume of orders filled at the bid and ask prices, or the up and down ticks, to determine buy-sell pressure. Many traders use Cumulative Delta to look for divergence. If the market is bullish, but the Cumulative Delta is bearish, this could indicate a lack of strength in the bullish move, and the market could become bearish. Additionally, if new daily highs or lows occur, but the Cumulative Delta does not also have new highs or lows, this again could indicate a lack of strength that could result in the market reversing. And this indicator requires historical tick data that is bid-ask stamped. And there are a few different ways by which you could calculate Cumulative Delta, and I would like to include a link to our help guide that goes over that. We'll go ahead and right-click and select Indicators, and we'll cover a few of the available settings for this indicator. And we'll start with Delta type. And with this setting here works similar to how it does on volumetric bars, and it determines what kind of data to use. We could either select bid-ask or up-down tick. And you could also change the period of this indicator. With this set to session, this will accumulate volume data for the entire session. By setting this to bar, this will accumulate volume data per bar, so the Cumulative Delta will reset on each new bar and have an open of 0. And the Cumulative Delta indicator will also allow you to filter out ticks from the calculation based on the minimum volume. By changing the size filter to 50, the indicator will now only include ticks with a volume of at least 50 contracts. We'll go ahead and move to the last section of today's presentation. And VWAP stands for Volume Weighted Average Price. The VWAP is a total of the dollars traded for every transaction, price multiplied by number of contracts traded, and then divided by the total number of contracts traded for the day. This indicator also includes standard deviation bands. When the price moves away from the VWAP, this could indicate pressure for the market to move back towards the VWAP. The standard deviation lines are often used as areas of potential support and resistance. By default, the VWAP line will plot red if above the corresponding price data, or green if it is below the price data. We'll jump into the indicator window to view a few of the available settings for the VWAP. And resolution set to standard is sufficient for most users and is recommended. This setting applies the volume from the bar to an average of the high, low, and close. Setting the resolution to tick is more accurate as it applies the volume for each tick to each tick's price. However, this is more resource intense to process, and tick mode requires historical tick data. The trading hours section is used to select the session on which NinjaTrader will calculate the VWAP. It will still be limited to the bars that are on your chart, so if you had an ETH or extended trading hours chart and wanted an RTH, or regular trading hour VWAP, you could apply the appropriate trading set hours. So on this chart, I am using the CME US Index ETH, or Extended Trading Hours template. If I were to select the RTH template, the VWAP will only plot on the regular trading hours, even though I am plotting the extended trading hours on the chart. And if you would like to ensure that you're using the same trading hours that are being applied to the chart, you could just select the Use Data Series setting on the top of the menu, and this will then apply the same trading hours the chart is using to the indicator. You could also change the number of standard deviation lines being plotted from 0 to 3. And you could also define the range for each of the standard deviation lines. For example, you could use Fibonacci levels. And as you increase the standard deviation multiplier, the deviation line will move further away from the actual VWAP. And that is all the material I had prepared for today's presentation. So for those of you that need to get going, I would like to thank you for taking your time out of your day to attend today's presentation, as I realize that traders' time is their most valuable asset.